Good evening. It's 6:16 and this is a market commentary for the week that just passed. And I want to teach you guys how to find. I feel like this you guys care is crap. You guys explain to you, but I want to teach you. Feeling no you what this you guys and say. There's a lot of people use it too. Using it sounds very mundane to me. But let's get into it. Okay, so finding bearish setups in uh bearish underlying bearish markets, you understand? So first of all, when we forecast a bearish bias, right, we'll be looking to sell above old highs. Now what we look for is that we look for a structure shift. That's going to be our first clue. For those who don't understand that, I mentioned it in IPDA, my IPDA lesson. So you can go there and then you can go to the old videos and watch them. Understand? Watch the old videos and then look for the IPDAs and understand what I mean when I say structure shift. You understand? So price is going to look to take out old highs and then settle for old lows. You understand? So this is a structure shift. Now look at this. Price made a little run down, sorry, made an impulsive run up and then a shift downwards again, breaking this low. We term that as a what? Market structure shift. You understand? Now price is giving us a clue that what does it want to do? It wants to start repricing lower. It wants to give us bearish prices. You understand? So when we see things like this, we start positioning ourselves for bearish setups. You understand? Since I traded only XAUUSD, I found beautiful setups last week. So I'm going to because a lot of people sometimes get locked up in where do I find a setup? How do I place this? How do I do that? How do I? Okay, I'm able to tell that price is going bearish, but I don't know where to position myself. We are about to dissolve that in today's lesson, today's episode. So now, for this, right? When we are looking for bearish setups, we look for price to take out old highs or enter bearish imbalances. So this is what a bearish imbalance looks like. You see that from this, you can see that from this level, all the way down here, right? There's no weight that it sits together. It's a big gap over here. That's an imbalance. Old high is something like this. Old high is something like this. You see, it got taken out over here. So this is an old high, 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 old high. Oh, sorry, old low, old low, old low, old low, old low, old low, old low. Understand? So those are old highs and old lows. Now, since price is bearish, since price has given us a direction, right? We are going to take any movement up as a hunt for what? A hunt for buy side liquidity. So this is how price operates. Price operates from buy side liquidity to sell side liquidity. That is, if it is going to deliver sell side, right? That means it has to take out buy side. You understand? So when we see a movement downwards like this, impulsively engulfing, it engulfed this candle, this one, this one, this one, and this one. We are convinced that what that price is going to what is going to reprice lower. After engulfing lower, what happens? You can see that there was a retracement up. There was a level price got to, and then it kind of started consolidating around that level. Now we know that price is bearish. So when we see consolidations, we look for old highs. You understand? Or we look for levels where we know that okay, when price gets there, it's going to drop. Do you understand? And then look at this. Look at this beautiful setup. On the daily, you would see that this was the candle high of one of the consolidation candles. And then what lies above it? What lies above it? Boom. That's a fair value gap. Do you understand? So we look for price to go all the way up enter the fair value gap, and then what, start showing signs of coming down. Do you get it? Start showing signs of coming down. Do you get it? And then it comes down. You understand what I'm saying? So now, how do we possibly hunt for, sorry, sell setups in sell scenarios when we are extremely bearish? Now, when we are extremely bearish, we are looking for price to only deliver bearish scenarios, and then we are looking for price to take out old highs or enter bearish imbalances before they do what? Before they deliver the bearish scenarios. That means they deliver price lower. Do you understand? Now let's start from Monday. Last week's trading week delivered a lot of setups, and then myself, Charlie, there's a lot of noise here. Oh. Myself, I'm a beneficiary of these setups. So now this is Monday. Now, before Monday, Sunday open. Now, for those who have been trading for time, can see that anytime a weekly candle is opening, it starts from Sunday. That is not by mistake, right? That is because, okay, so this is for those who use New York time. You understand? That is because each new candle opens on the previous day, 6 p.m. You understand? Each new candle opens on the previous day, 6 p.m. It doesn't wait for 12 a.m. before it opens. The market breaks in the evening. Do you understand? The daily candle takes 24 hours to form. Sorry, the daily candle takes, yes, 24 hours, but it doesn't end on the 12 a.m. of the next day, right? It ends at 6 p.m. of the current day. And then, sorry, it ends at 5 p.m. of the current day and opens 6 p.m. of the current day. So when you go on the daily time frame at 6 p.m., you see that when you go on the daily time frame in Monday at 6 p.m., you see that Tuesday's trading day or Tuesday's candle has already opened. Do you understand? You can move with that. Or if you are not that kind of trader, if you are not uh, the Asian session trader, then you wait for landing on New York. But let's see how we can catch pips when we are extremely bearish. Sunday opened, took out this low, and for those who watched last week's commentary, we can see that we've been targeting this low already. So took out this low, and then what will price possibly do? Price will possibly go higher or retrace higher. If it doesn't go higher to take out a previous low, sorry, a previous high, then it's just chasing higher to just come down. Maybe enter an imbalance. You understand? So took out this low, started going up, 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 up. Now, we, the New York session traders, what are we looking for? When price is extremely bearish, we want to position ourselves in price where price takes out a previous high. You understand? Or a short-term high or a previous long-term high or intermediate high, any high, you understand, or a bearish imbalance. So now it starts coming down, 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 down. 12, 1, 7, 8, 7, 9, 10, 11, 12. So this is Monday's open day. You understand? 5, 6 o'clock, 6 o'clock, we start monitoring markets. Now, the rule is this: when we are bearish, right? At 6 o'clock going to, so sorry, so people start monitoring it from 7, but I like to start monitoring it from 6 because then I would get, my mind will get used to the price action. Do you understand? So from 6 o'clock, start looking at the price action. If it's bearish, we want to see a retracement higher. That retracement higher is bullish. Do you understand? So in a day, in a single day's candle, there can be a lot of bearish bullish movements inside. Your own is to find, that's why I keep stressing on bias framework, bias framework, bias framework. Have a bias, have a framework. You understand? If your framework is bearish, then you'll be positioning yourself in the price to find only bearish setups. Because in a day, price can go up and down like 800 times. You understand? Like, look at this. Down, up, down, up, down, up, down, down, down. So position yourself in the price where you can find only your setup, what you are looking for. Do you get it? So now, from 6 o'clock, price starts going up, 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 up. Now, when price starts going up, we don't panic. Why? Because we are already bearish. So when we see price going up, what do we look for? We look for it to go all the way to take out a previous high. So when it takes out that previous high, then what do we start looking for? We start looking for bearish movements downwards. In fact, immediately it takes out that previous high, we start doing what? We start selling. Look what happened. 6, 7, 8, 9, 10 o'clock. 10 o'clock took out this high. You understand? Normally, when it takes out that high, we'll be looking to take out our profit at old lows. You understand? Old lows. So that means this will be our first target. But here is the catch. It's not always that your setup is at old lows. Let's say a day, your setup can be to target 500 pips. You understand? If you get that 500 pips somewhere here, you exit the market. Do you get it? You don't have to wait for it to take out old lows. If your old low is beneath 500 pips, then that one you should still hold your trade for it to, or you can just take it out at that old low and restructure and take a new trade. You understand? But if the old low is beneath your 500 pips target, you can just leave the remaining trade inside the account for it to run so that you get your money. You understand? You get your target. You get it. Oh, my microphone is going low. Okay. So at previous highs, we do what? We scout for buy setup. So we took out this high. We enter 500 pips. We are done. Now let me show you on the daily time frame. On the daily time frame, look what Monday did. I told you price goes to. So if you're a swing trader, you'll be looking to take your trade off of this high. You understand? Off of the liquidity sweep that happened over here. You get it? Because this sweep has already happened and there has been a push downwards. You understand? So we are still looking for imbalances. Look at imbalance. It entered this imbalance. Boom, it went down. You see, took out this high. Boom, it went down. But then we are New York traders or intraday traders, what do? We start looking for these kind of setups. And then I said it earlier. The reason why price came back up to take out this high is that, right? As at 6 o'clock, the next day's candle has opened. You understand? So if we are still bearish, what are we still looking for? We are still looking for price to do or to take out previous highs so that we can enter our what? Our trade. So it came up, took out this high. Remember, where was that high? It was inside the previous day's candle. You understand? It was the previous day's high, and then this gap upwards was what? Was a fair value gap. So it peers inside this and then starts dropping. You understand? Now, the next day, 12 o'clock, 1, 2, 3, 4 o'clock, 5, 6, 7, 8, 9. 9 o'clock, what happens? We see that price comes all the way upwards to take out a previous high before it goes down. Immediately it takes out this high. What do? We chase price back down. Over here is 375. My regular pips I look for is 300 pips. And this happens to be what? An old low. 375 pips, I'm done. Even 300 pips, I'm done. 375, I'm done. Takes out a low, I'm done. Understand? It came all the way 559 pips before stopping. That's cool. Now, Wednesday, again, if price is bearish, right, we look towards to sell above previous highs. This bearish, this Wednesday's price chart, if you are not careful, it will trick you. Look at this. Oh, my microphone is low. It can off right now. It went up during the landing session. Went up, midnight, 1 o'clock, 2 o'clock, went up